The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 15th. How about that, folks? Already halfway into the first month of the year. January 15th, wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, or just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. So let's go look at one of our tools. You've heard this tool before. This is a tool I call We Are What We Believe. For those of you not familiar with my stories, this is the story about Anton, a Russian physician. He turned author, considered to be amongst the greatest writers of short stories. Born in 1860, not 1960, in 1860. So let me tell you one of his stories. And it's a story about a woman who dreamed she was being chased by a large, rather ugly, terrifying monster. Everywhere she ran, the monster would always be right behind her. Now, in an attempt to get away, the woman ran into a canyon that provided to be a cul-de-sac. Uh-oh, she was trapped with her back up against the wall, and the monster came closer and closer and closer. And when the monster was within inches, she cried out, "What horrible thing are you going to do to me?" The monster looked at her and said, "Well, that's up to you. It's your dream." Question: have you ever felt as if your back was up against the wall as that monster was chasing you? Something to think about. You see, it was at this point in the story that the woman could decide whether or not she wanted to be devoured by the monster, have the monster disappear, or better yet, how about turn that monster into a prince? You see, it was her dream, and she had the power to determine how it would play out. Each of us, folks, each of us creates monsters from time to time. We view aspects of our lives, as different, unique, perhaps things, that we consider to be wrong with us. And then we spend most of our lives trying to hide those things that I really like to refer to as qualities. That's right. Your uniqueness, it's really a special quality. It's a gift. It makes you special. And last time I looked, folks, that is not the definition of a monster. It's so important to remember that our lives are very much like our dreams. We have control over our thoughts, and therefore we can view our lives in any way that we choose. If our thoughts have created a monster, well, we can choose to turn that into a positive self-image. Each of us, within each of us, is so much potential, so much incredibly rich potential. It's an inner kingdom of infinite resources that you and I share, that you and I have. And each of us has the ability to set aside any sense of burden, any apprehension. And guess what, folks? Here's the cool thing. You and I, we can do it in a heartbeat. So every tree, every flower, every blade of grass, it is magnificent. It's magical. It's different. Just like you and I. We're magnificent. We're magical. We're different. Create the type of self-image that'll make you happy. That's the most important thing. Make the most of your life. And guess what? Get rid of those ugly monsters. In fact, turn those into beautiful princes or princesses, whichever it is. And the reason is because you are just simply extraordinary. Extraordinary, that's all it is. So, folks, the truth is we are what it is that we believe. Well, let's go see what we believe about these markets out here. Right now, Dow futures are up 33 points. They're trading at 16,332. S&P futures up 4.5 points. They're trading out at 1837. NASDAQ futures up 14 points, trading out at 3588. Russell 2000 up 3 points, trading at 1162. Let's add a lot of movement in the currency market inside the Great British Pound. That's got the largest movement. The euro, not too far behind that. Goldilocks back $8 and change right now. It's trading at 1236.70. Silver's down 23 cents. It's trading out at 20.04. Light sweet crude up 22 pennies at 92.81. A quick glance around the pond out here across the globe. Over in Europe right now, whoosh, the DAX is on a roll. It's up 1.5%. It's trading up 139 points, trading out at 96.79. FTSE, though, is the bigger story. The FTSE up and above the 2007 resistance level. Now, that is something to think about. That's trading out 44 points right now, trading out at 68.11 over in Asia last night. The Nikkei up 386 points. Talk about ups and downs out here. 386 points, 2.5 points. The Hang Seng up 0.5%. That was up 110 points. And the Shanghai, which we were taking a look at yesterday, didn't give us any information. It was down 3 points. No big deal out there. No additional breakout. But we'll go take a look at those stock charts. But let's start off by taking a look at, I don't know, what do we want to take a look at? How about the S&P futures contract? Let's pull this back, because when we began the show on Monday, and it is Marvelous Wednesday out here. Well, it's Marvelous Monday, it's Wonderful Wednesday, Wacky Wednesday. Guess what? When we started the show on Monday, the S&P futures were at 1837. We're trading at 1837 right now. You talk about the yo-yo, you talk about a consolidation. That's what it is that we've got out here. We're in a consolidating market, bouncing from high to low. 18. And yesterday I was showing a chart. Let me go ahead and pull it up on the screen out here. What has been interesting, it did not work yesterday. You know, we are pattern recognition experts. As we're trying to identify our different unique patterns that are out here inside of the S&P futures contract, what we have seen is selling take place right around the open, within the hour of the open, usually between 9 and 10:30, 9:30, 10:30, and I'm talking the open of the New York Stock Exchange. We've seen selling come in. Now, that did not take place yesterday. Did not take place. Now, I don't know if it's one seller, if it's a group of sellers. I'm not going to get caught up. We're going to get caught up into the mere fact that there was no selling. That certainly took place yesterday at 10:30. I talked about it on the show. We saw no selling. In fact, what we saw was a bounce all the way back up to that 1837 level. So now, what I don't know is the selling very much price related? Because yesterday at about 9:30, let me see, where were we at in price here? We were probably right around the 1815 level. So, you know, we're 22 points higher today. We're going to find out whether it's this 1837-ish level that is the selling zone. And we'll know here within the next, I would say, the next hour and a half. Certainly by 10:30, because within that first hour of the New York Stock Exchange market open, the 9:30 session out here, that's where we had seen selling come into play, and we're up against some resistance. We'll see if that resistance is going to hold. Now, if we take a look at the stronger index out here, let's go back to the 120-minute charts. I just flipped over to the 30-minute out here. What we can see, let's go take a look at what has been the strength in the marketplace at this point, and that has been the NASDAQ futures. So we take a look at the NASDAQ futures. They are right up against the resistance of the gap down that was created after the close on December 31st. Now, the high that took place into the close was 35.94.75. The low of that candle session was 35.88.25. We're trading at 35.88.75 right now. It's a 120-minute chart. So this 120-minute session here on my time frames, because I use the open of the futures market, does not take place until 10 a.m. So we've got a little bit of time here before this candle session closes. We'll see if this area is going to act as resistance. If not, and what we had that occurred here in the NASDAQ futures was it made a nice 0.618 Gartley buy. Now, it didn't get down to the exact point on, on Tuesday, Wednesday, on Monday, as the market was moving lower into the close. It got pretty close. 34.86 would have been the actual 0.618 retracement. The retracement that I'm referring to is the one that came off of the low back on December 18th. So from that low to the high on December 31st, if you took your ruler, the 0.786 level would be about 34.86. The actual low that the NQ got to, the NASDAQ futures got to, was 34.92. So about 5 points away. And at that 34.86 level is also a nice 1.272 expansion of your B2C swing point. Close enough, wide-ranging bars coming into that area. Nothing but some just short-bodied candles, little bullish engulfing candle that took place here at 4 a.m. Had some additional follow-through, most certainly throughout the entire day yesterday. Also, the market was moving from where? From that oversold condition of that relative strength 14-period RSI index out here. And now what we're seeing is if, in fact, we see a close above the high of December 31st, that price point is 35.94.75. I would have to say that what's unfolding is the ultimate of any Gartley pattern. In this case here, a Gartley buy pattern, and that would be an A to B equals CD up. Now, the 1-to-1 projection of the A to B equals CD up, that's if it can take out the December 31st highs. That'll take you up to about 36.71.87. And Now, that's not the move. It's not going to be a straight line move up there. But if, in fact, it can get over December 31st and that level holds, meaning it comes back, it tests it, it works off an overbought condition, because the market most certainly on the 120-minute chart is in overbought territory out here, and so we can expect some chopping around. But the longer-term projection, if it can take out those highs, 36, 71, 87, that's actually the minimum, because if the strength can maintain itself in here, and I don't know that it is, because we've been chopping around. This has been a sideways consolidation move, and guess what? If it can't bust it up, what's it going to do? Yes, indeedy do. It's going to try to bust it down. That means we could see the NASDAQ futures get back down into the 3,500-ish level, 3,550 or so out here. So those are our targets. We know where the tug of war is. We're just simply going to stay tuned and watch. It was just like the Dow futures that had that 160-point move to the downside. You just have to, you know where the war is going to be fought, and you just have to see which side of the market the battle will be won. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Futures up 40 points right now, and what I've got on my chart, what I've got on my screen, if you're watching us on TigerTV, it's a weekly chart for the Queen, for the Euro-US dollar currency pair. I mentioned there's some movement inside the currency pair, so we'll take a look at them. But one of our Tigers had posed a question a few days ago, and taking a look. It wasn't posed to me, it was posed to Larry Pesavento. Now, I don't recall what the outcome was because I just kind of heard it in passing, and then I took another phone call or something like that. So I don't know what the actual outcome was. And it's something that's a pattern that I had noticed a couple of years ago, and it's with regard to the Euro-US dollar, not the Euro-Japanese yen, Euro-US dollar currency pair. And what's interesting is in the beginning of the year, sometime in the January-ish time frame, the end of December, the early part of January, typically what the euro does, it makes a significant higher low. The duration of which you've got to take a look at other things out there, other expansions of swing points and patterns and so forth. But what you'll notice, and it's a weekly chart that I've got on my screen, so if you're listening to us on the radio or your mobile device at TFNN.com, just remember you can always get the live stream of the show by going to the homepage of TFNN.com. Upper right-hand side, you'll see that box, that little button, three or four smartphones on it. Click on that. The show will stream live, and, of course, the archive is on Channel 9. Of course, you can follow along at home. You can go get your Euro-US dollar currency pair chart. Now, this has worked all but really about one time period out here for the most part. And if we go back to now, I'm just going back to 1994, so I'm only taking it back a few years, right? 10 years. 20 years. I'll get it right out here. So if you go back to 1990, so I'd say it works pretty well. You go back to 1994 here, right around the December time frame in 1994, got this little yellow box, and you can see the euro made a pretty significant low. One had made an expansion of a set of swing points, all A to B equals C. I'm not going to go into that. So that was around the December time frame. It was right around the 124.5 level out here. If you then take a look at the 19th, so that was the beginning of 1995. Let's come take a look at, this is great. I lost my... hope I haven't lost my... I'm losing the battery inside. That's nasty. I'm going to have to go switch over to my actual laptop thing. In any event here, if we go back to 1995. I missed the 1996 time frame out here. Let me find the January, December 1996 out here. Here's December of 1995. You're up in about this 133.50 area. Let me see if I can just put a little circle around this. So here we are right around the January time frame, 1996. Makes a relatively significant high out here inside the euro. Let's come and take a look at 1997, right around January 1997. It makes a significant high out here in the market. Let's take a look at 1990. I guess I don't know where 97 went to, but let's go take a look at 1998. I've got 2 minutes out here. Take a look at the significant low that it made. Take a look at here back in 1999. This is in the January time frame, pretty significant high that it made out here in the euro. Let's take a look at it here in the year 2000. I'd say it made a pretty significant high inside of the euro. Let's take a look at here in 2000. Here's the end of December of 2000. Pretty significant high in the market. Let's take a look at it in 2000. I don't know what happened in 2001. Out here, where's 2000? I guess I am here I am. I'm in December of 2001 right here. So December 2001, it makes a pretty significant low. In fact, a very significant low inside the market. It did not really work here in the 2002 time frame. This is blue box area out here, so we're just going to bypass that. Every now and then, these patterns are not going to work. But come here, take a look at the, I guess I'm in 2000, end of 2003, beginning of 2004. Pretty significant high in the marketplace. Makes a retracement down here. So what I'm really showing you is the euro. For some reason, I can't tell you why, but around the December and the end of December, beginning of January time frame, the euro tends to make a significant high or low in the marketplace. A significant high or low. Now you got to use other trading patterns that are out there, but it is the one of the most unique patterns that I have seen when it comes to. Now I've gone ahead and I've tried to identify the same pattern on other currency pairs. It's not out there. I haven't found it. Maybe you'll go explore, like Lewis and Clark or Stevie and whatever your name might be. You might find a pattern like this, but at the end of the year, sometimes it takes a few weeks or what have you. You find significant highs and lows inside of the euro out here. So we're still in that time frame because we're in the early January time frame. Of course, what we do know here is the euro is certainly bumping up against a significant resistance level, and that's that resistance of that descending price channel and trend that takes us back into the 2008 time frame. Hey, look, if the euro breaks out from here, I would have to say that we've made a pretty significant low, maybe a very, very significant low. So that is on the euro, U.S. dollar. Of course, that's longer-term trading patterns that you're taking a look at. 877-927-6648. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
If you're an active trader looking for the Dow, NASDAQ, and S&P, plus specific trade recommendations, there's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic bot spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow up. My screen went blank. We got the Dow up 32 points, trading out at 16,405. S&P up 4 points, trading out at 1843. Composite up 17 points, trading out at 4,200 and change. Russell 2000 up 3 points, trading at 1166. Apple up $8. Maybe on good news from China Mobile out there. It's up trading at 554. Microsoft up 37 cents. My goodness, did you see the SOX index yesterday? Holy cow, little rocket ship out there. Google's up $1.85. Intel's up 33 cents. That's a little over 1% here. Intercept Pharmaceuticals up only $13. What happens? This thing's usually up 130, 200, down 130, what have you. It's up. It's leading the charge today. Tesla Motors up 970. Apple up $8. Datalink up 3 1/4. Nuvasiv, NUVA up $3. Solar City up a couple of bucks. Google's up $2 to the downside. New Skin Enterprises off 6% this morning. X1, XONE down 10% off $6, trading out at $55.70. Kiwi PLC, QIWI, that's down 13%. Know that was, maybe still is, a part of the IBD 50. Fastenal, that's down about 6% this morning. Voxel, Jet, VGA, VJET, all the 3D software firms are down here this morning. 3D Systems is off about $1.72. PetSmart, PETM, off $1.29. Our call number, 877-927-6648. Give us a call, folks. Would be happy to take a look at your stock chart. So I had a request out here inside of the Tiger's Den to take a look at the 1929. I guess the logic is there are some charts that are going around on the internet. I believe that was the reference inside of the Den that is really referencing the 1929 crash to today, where we're at right now today. And I have seen that stock chart. I think it may have been originated by Tom McClellan out there. A great technician, no doubt. In fact, his mother and father are the ones that created the McClellan oscillator. So I utilize those oscillators. They've been around for a long time, and so I certainly admire their work. And I believe that Tom has gone out. You've seen the stock charts that compare RCA and GE, Microsoft to Apple in the marketplace, and all this is just kind of I don't know what the proper terminology is. When you're overlaying the chart, kind of like trying to get some type of radio frequency, or believing that chart patterns do repeat themselves. And I believe that the time frame of the high. So this is kind of interesting. The time frame, if I'm not mistaken out there, somebody out there may be more familiar with the chart than I am, but I'm pretty sure that the high, if you were to go back and I'm not going to go ahead and try to repeat that stock chart on my screen here, but I do believe that if you try to correlate somehow the 1929 stock chart to today, the high in 1929 will correlate to the high of January 14th. That would be yesterday out there. So I'll just simply put that on the table, and whether or not that happens or not. The question that was posed to me is what's different now than was there back then? And I say, well, one of the differences is when we take a look at the stock chart here. In fact, I think I did a little small little workshop. Let me see if I can fire that up here. Give me one moment. I think it's tried to open it during the break there real quickly, and so I think I can. It's just a little slideshow, and that way. Well, here, let me do this first. So let me multitask. We're looking right now at the stock chart for the Dow. This is 1929. So I am going to take us back to 1929. September 3rd, 1929 was the actual high. So if you're going to try to correlate those two charts, at least if you're going to be paying attention to the one that Tom put together, I believe it's January 14th. Somebody out there, again, might be able to confirm that, but I'm pretty sure it was January 14th, which would say that yesterday's high, which was not a higher high, in the actual high inside of the Dow, okay, so the high at that stage in 1929, that came on September 3rd. So there's one thing that's already wrong with that correlation, okay, because yesterday's high inside the Dow was the weakest, so it didn't form a new high out there. So that's number one that you can check off your list of something that's not exactly right. Now, you can't necessarily expect these radio harmonics to match exactly, but hey, if that's what is being pushed out there, I'm telling you that didn't happen, so check one is off the screen. Number two, on the daily chart, you had what I like to refer to as price relative strength divergence. That's when the RSI relative strength tool was, talk about having brain farts out here. And I have them off. That's a good thing that you're not in the same room that I'm in out here. Lord, in any event, let me try to keep this on track here. Relative strength is a great tool to identify momentum, and when a stock, an index, when a commodity, when a currency, I don't care what it is, when it's making new highs and it's doing it on less relative strength, you have a divergent pattern. Now, I teach folks how to trade that pattern, what to be looking for, because it's really crucial. It's very important. Well, in the case here, if you take a look at the Dow, its relative strength reading back in July of 1929 was up in the 78, 79 level. When you get over 70, you start to get into an overbought condition. Hey, when you are in a bull market, staying in that level is normal because you expect things to motor on. Well, look, the Dow back then was at 350.09. That was the high that was made on July 8th, 2009. What the Dow did between that time period and September the 3rd, 1929, went ahead and made a higher high. And it did it on what? It did it on less relative strength. The relative strength reading on that day was 73.6. 73.6 versus July 8th high, which was 78.89. So you've got a higher high on less relative strength. It says be careful out there. Now, in 1929, which is unusual because you had a island reversal pattern. Okay, island reversal patterns, the most bullish, most bearish. I don't care where they occur on a stock chart. You need to be paying attention to it. Especially inside the Dow, you don't see a whole lot of gaps out there. In this case here, there was a gap down that took place between August 8th and August 9th. That gap down then created the island reversal because we saw the Dow actually gap up on August 12th out there. That created this little island. The most powerful, either top or bottom, inside any marketplace. And so you want to have these signals as well. Now, what happens is that the Coast Guard cutter comes back to rescue those passengers inside of that island reversal. And they actually came back and they rescued those folks. They stayed docked. It was September 27th when they were able to get back there. And what happened was, quite frankly, when we saw the low get taken out, that was a scary signal. If you were a technician back then and you knew all the things that we now know because we're able to go back and take a look at the stock charts out there, it's telling you that the most significant bullish pattern out there just failed. And you learn more from failure. You know this for a fact. You learn more from failure than you do from success. So you've got a price relative strength divergent pattern. You've got a island reversal that fails. And this is back before the crash. This is back here on October the 3rd when that pattern gets taken out. Boy, you've just gotten all kinds of indications that you probably should be in cash, maybe taking a look at short positions, whatever it might be out there. And so that was a set of patterns that existed in the marketplace. Look, folks, when the Dow made a significant low after the crash, it would have scared anybody out of their mind to go take a long position. What actually gave you the signal to come into the market to go long was what? A price relative strength divergent pattern out here. take a look at the low that was actually formed on October 29th out here. Market pushes down, gets down to a low of 212.33, closes at 230. The relative strength reading out there, 15.19. Now, that wasn't really the trade. Had a nice bullish engulfing candle, by the way, on that very next trading session. But you don't trade based on candles alone. They're one of the tools, a very important tool in the way that the market communicates to us. Very important tool out here. What we did have was you went and made a lower low on November 13th, 2009, and there you did it with a higher RSI reading. You had price relative strength divergence inside of the market. You went ahead and you made a higher low on that RSI reading and a lower low in price. And you got a more bullish signal, quite frankly, on November 14th, 1929. You had the nice little bull sash candle out there. Market gaps up the very next day. You get that second opinion. It was off to the races out there. And so that was what occurred back in 1929. If we fast forward to today, let me see if I can fast forward to today. By the way, I had mentioned a couple of we've had two P index dates here, so I'm going to bounce around just a bit because I pulled up a different screen. That's okay. I'm allowed to bounce around just a tad. And we've had two planetary index dates out here. Now these are tools that were developed by Larry Pesavento, Dr. Ruth Miller, one or two other folks out there that worked on that. And I had mentioned a 2P index date that occurred last week. I'd have to pull up my newsletter to find out when it occurred. By the way, on the 14th, I think it was yesterday. Let me just pull up my newsletter just to make sure. I hate to give you incorrect information out here. But there we've had two P index dates here recently. Let me get to my expanded master edition. And what I've got is a weekly chart on my screen out here. So here's a weekly chart for the Dow, and that P index day actually came in. I'm trying to pause here so I can give you the actual days out there. A two planetary index date. Now, this goes back to the original work. So if you were using the new American ephemeris right now because of the addition of a couple of planets that were not in the original work that was done, so I'd really track them both. Based on the old work that was done, Thursday, January 9th, was the 2P index date, and it was Monday on January 13th that it was a 3 planetary index date. Those are the only P index dates during the month of January out here. And this was the chart here where I show on a weekly basis the other periods of time where we've had these. And what a planetary index date is, each day you've got planets that are in alignment with the Earth. And what we take a look at those significant angles. We take a look at 0. We take a look at 60 degrees, 120 degrees, 90, 180 out there. And so we're looking at those specific angles. Those are what we consider to be the major aspects out there. And when you but you also have days, major and minor, and that's where these planetary index days come in. When you only have 2 or 3 planetary index days that are in alignment, either major or minor out there, it's usually an anomaly. And typically, something can tend to happen. We overlay those on the stock charts just simply to see if in fact they have an impact. And here, what I've overlaid on my stock chart is are those 2 P index days. I don't have the 3 P index days out here, and the significant changes. Have they marked significant highs or lows? Hey, back in October 2012, October 6th, it marked a relatively significant high. Market made a retracement. I would have to say in March of 2013, only P index day that we had of a 2 level out there. The market wasn't making a higher. It's hard to say that it really did anything here. We can see the one that took place during the week of January 9th thus far right now inside the Dow has marked a high out there. So what does that mean? I'm just giving you the information. That's all that it means. Now, I'm going to go back here, and we're going to take a look at the daily chart for the Dow. Actually, the whole price relative strength thing, it's actually might be easier for me just to pull up one of my other daily charts out here. So give me a moment, see if I can switch over and find my daily charts. Here's the ES Mini, but let's go take a look at the actual Dow. And I think I've got a year's worth of data. So here's the Dow, and what we're taking a look at right now inside the Dow, there is no price relative strength on a daily basis. This system, well, let me make sure that, I don't know if I've got the tool turned on. That's a rotten shame. I think that I do, but let's just take a look at the actual Dow chart here back in 1929, where we're at right now. And what we hear, so here's the daily chart. Right now it's active, and we make a high out here back on December 31st. So that's the high that we're dealing with, the relative strength indicator at that stage, 75.85. If, in fact, we were making a new high right now, yesterday or today, and we were doing it on less relative strength, then you would have that divergent pattern. But it is not present now, so it does not emulate what we saw back in 1929. So far, I think you can just kind of, that doesn't mean that I can't control whether a market crashes or it doesn't crash out there. But what I do know is that the significant highs inside any market that we have seen on the monthly, on the daily, on the weekly charts, they have this pattern. Because I've looked for all of those. I don't know about you, but I'm like this is my tinker. I think I told you yesterday if you're listening to the show, I didn't make it through art school. That's when I was, I think, in kindergarten, first grade, second grade, or what have you. I used to draw stickmen out there. I'm a math guy. Yeah, by age 21, I was a CPA in the state of Florida and the state of Michigan. By age 21, folks, licensed the whole kit and caboodle. So was always not a math science guy. I think I told you my story about operation, and, I was never able to get those bones out of that. I got one of those as a gift as a kid, and I sucked at it. So that was a determination that I probably shouldn't be a doctor, at least a surgeon out there. However, this is math. This and the patterns that are out here. Yeah, this gets me juiced up. And so it's always searching for different clues out there. And so I became so enthralled with the ephemeris and the digital and the information that's available to us. Now you can overlay things on charts to see if those were leading indicators. Price relative strength, folks, best indicator out there. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow's up 50 points. S&P is up 5 right now. Intuitive Surgical down 11 points. Regenerate Pharmaceuticals off 13. New Skin down $10. Apple's up 10. Intercept Pharmaceuticals is up $21. Just to go back to the price relative strength divergence out here, knowing that it was such a valuable pattern in the marketplace. As I said, I went back. I love being a student of the charts. And look, I do believe this, that is that there's not any one tool that's going to work where you're going to bat 1,000%. That's not how this game works out there. But you do look for tools that are consistent. And I have tried to be very diligent about my where I am very diligent about my work and try to find tools that work really, really, really well, because this is nothing more than a probability game. That's all that this is. And so long as you use stops and you take the emotion out, that's really one of the keys. You've got to learn how to take the emotion out and trade your signals. And in order to trade your signals, you've got to be able to do the work to see what your system expectancy is. That's a whole nother topic and a whole nother conversation. But and we come back, and this is a monthly chart here for the S&P 500, and as it was making its high, and you need to understand reversal candle signals, those are key, both bullish and bearish. You can go read the books, but they don't teach you how to trade them. I do that. I've got a workshop out there if you're interested in it. Send me an email, steve@tfnn.com. We can figure out how to get you in. But back here in 2000, that's what we're looking at right now. This is the S&P in September of 2000. It formed a price relative strength divergent pattern. The other, if you're watching us on TigerTV, this is the other tool. It's the Rhodes momentum indicator that I have built on my screen out here. And so you've got the reversal signal. That's as it was making the high. Take a look what was happening as it was making a low. Back here, this is the time period of 2003. When the market was done after that significant reversal out here. You can see these little green letters. You might ask, what do those mean? That tells you clearly that the sellers are the ones that are in control of the marketplace. When you start to see these red boxes, it tells you that the buyers are in control of the marketplace, and that's very helpful out here. You can see there was a time period here where there was a price relative strength divergence. This took place back in September, I believe, of 2006. However, that would not have been a tradable pattern. You would not have shorted that pattern out here. In fact, you were in super strong bull mode inside of the S&P 500. Fast forward to the high that was made back here in 2007. In October 2007, we had that price relative strength divergence. You did have a bearish reversal signal right here on the following month. You then went into a cautionary zone. This was back here in February of 2008. Look, you may not have gotten out at the high. This is all about, here's the key. 70% of you listening out there, it's almost really 100%, quite frankly, 70% are only managing long-term funds. 100% of you are actually managing long-term funds, but the other 30% you're doing some daytime type trade, not day trading. You might be doing swing trading, some combination of trading other shorter-term money out there. But my goal is to keep, especially from a longer-term perspective, is to keep you out of these significant downturns out there, and also not to get jostled out of a market that's moving up when you start to see some pullbacks. It's the reason that I developed these. So you will see these patterns come at significant turns in the marketplace. And as we fast forward to where it is that we're today, and this is the S&P 500 that we're looking at, no price relative strength divergence. If I go take a look at the New York Stock Exchange, let me put that up here real quickly, because that's really the index, and we'll take a look at it when we go into the next hour out here, because we're running out of time. You can see up at the highs back here in 2007, you had that price relative strength divergence. We do not have that pattern as we speak here right now. So that's it for today's show, folks. Thanks so much for joining us. If you're off to start your Wednesday, have a wonderful Wednesday. Otherwise, I look forward to seeing you in about 8-9 minutes. Take care, folks. Have a great Wednesday.